know who it is. It's your boy Wall Street Shooter, and I'm checking in for the gang. And I got an educational video for y'all how to buy the dip effectively. You know, dollar cost average. I'm about to give you all my sauce on how I do it so you can kind of maximize your profits and minimize your losses. Now, before I get into all that, if you like what I'm doing, go ahead and hit that like button, share it with your partners and your homies and your baby mama and your wife and all them so they can learn a little something too. And then if you want to stay connected to your boy, hit the notification bell so you can be part of that earners club and get all the updates, because I try to post frequently as possible on YouTube. Also, if you want to join the earners club, the link is in the bio to the Discord. There's 4 different levels, so you pay the monthly, which you fit is best, or the value of the content that you're receiving, and you can cancel at any time. Enough of that. Let's get into it. We're looking at the Amazon chart, man. So I'm going to break this down to you guys. I'm going to give you a little big tidbit, some game, whatever the case may be. And then you can kind of go ahead and go to the field and apply it as much. So the first and foremost that you want to do, you want to make sure you're looking at the daily time frame or the weekly time frame. You are not buying the dip effectively on any other timeline. I don't care what they telling you in them streets. You are not buying the dip on the 1 hour chart. You're sure not buying the dip on any of the minute charts. You're not buying the dip for long-term holds unless you're using the daily or the weekly charts. All right, let's start there first. Daily or the weekly, right? Me personally, I like looking at the daily. Understand, when you're looking at a weekly timeline, you're looking at 1 week worth of data per candlestick, right? So this candlestick right here, that little boy right there, that's 1 week of data from 7-11 that week. This right here is from 7-4. That's 1 week. That's the weekly. Each candlestick is bunched up into 1 week of data. On the daily, same thing. It's just on a daily scale, right? The next thing to buy the dip effectively is making sure you zoom out. At least, I don't even want to say at least, man. You at least want to look at, okay, I'll say 5 years worth of data, right? And this will make sense when we're talking about setting up your buying zones, or your entry zones, right? You at least want to be looking at least 5 years. So on the daily chart here, I'm zoomed out to 2007, maybe, then this is about 2006 right here worth of information, right? This is enough information for me, buying the dip for Amazon. So you want to make sure you on the daily or weekly, you want to zoom out on your charts. The next piece of information that you may want to use, and this is what I use. Again, I'm giving you my sauce on how I buy the dip. You can take it, remix it like Diddy, all you want. And if you follow me, you know I'm a scalper. I enjoy day trading, scalps, so I use the EMAs. If you're doing long-term holds, you definitely want to have your simple moving averages, your SMAs turned on, right? Let's zoom in a little bit. All right, for my scalping setup, I use this yellow line, which is my 9, purple line is my 21, EMAs, this Tiffany blue line is my VY, right? Not worried about those right now. Long-term holds, I want to make sure I have my 50-day simple moving average, or SMA, 50 SMA, my 100 SMA, 100 days, and then my 200 SMA. Now, pro tip, if price action is below the 200 SMA, we are in a downtrend. That's an indicator to let you know we're in a downtrend. All right, here we go. If we look back here, price action is above the red line. We're in an uptrend. Which way is the price action moving? We're moving in an uptrend. Here's the 200 SMA. Where's the price action? It's below. We're in a downtrend. We know we're in a downtrend. Overmar markets, crypto and stock are in shambles. We know we're in a downtrend. But if you need to look at a chart and you have your SMAs turned on, you have a 200 SMA, and you quickly want to look to see what direction we're headed in or currently in, if we're below that 200 SMA, that's when you're supposed to be buying stocks underneath the 200 SMA, because we're in a downtrend. Above, That's when you're supposed to be taking your profits, right? You make more money when the market is down than you do when the market is up. Sounds crazy, but it's true, because you're usually getting prices on a better discounted rate than when the market is green bean, baby. And we want to avoid buying green candles because we only buy red candles, red days, red weeks. Then you have what the market is doing is consolidating. We'll talk more about that. So go back. Let's do a refresher. You want to be looking at price action from a daily or weekly. You want to zoom out at least 5 years, right? You want to make sure you got your 50, 100, and 200 SMA turned on. And you want to make sure we're below the 200 SMA to make sure, letting us know we're in the downtrend, right? All right, let's get to the fun part. Let's set our support and resistance lines. Now, I have lines already created here, okay? I want to go over these lines. First things first, what I like to do is I like to find my support line within the price action. What do I mean within that price action? I know for the last month, we've been trading right here in this little channel, right? I want to get my base. I know for Amazon, trading Amazon, I trade Amazon on a daily. I know 101.76 is my support line, right? Let me see what that looks like. This is the price action bouncing off of the 101 level, right? Retesting 101. I know 116 is my resistance in this current price action movement, in this consolidation period. I know 116 is my ceiling. So I want to plot those first, right? This gives me an idea of how I set my buying zone. So I got my 101 plotted. I got my 116 plotted. And I know we're consolidating. What does that mean? Trading sideways, AKA I like to call it crab walking. When you see a crab, do a crab walk forward and back? No, you walk sideways to move forward and back. Crabs move sideways. So I call it crab walking. All right. And excuse me, guys, I'm still over here, recovering from that, that stuff that's been going around the last 2.5 years. I don't want to say it. I don't want you to, scanning me or checking my videos off. I'm not putting out bad information about the 19. You feel me? But not deal with me, but bear with me, guys. You might see me take some pauses here and there. I'm still recovering, trying to get my lungs together. You feel me? And I'm drinking some tea as I do this. So just hang in there with your boy. All right, let's get back to it. All right, so I got my support and resistance within this current price action, right? The key thing is now I want to find other supporting zones, or what I like to call buying zones or buying levels or key levels for buying, right? Because we're buying the dip, right? So I identified 93.28, right? Let's just say 93 or 95 would be a zone, right? And 85.13. Okay, so now we got the fun part, right? We got the fun part out the way. We got our buying zones and these are based off key support levels, right? These are levels that if we fail at 101, our next key support level from my chart is 93. I feel comfortable buying shares within that 93, 95 range. If we fail there, then I know in that 85 to 83 range, it's a good opportunity to buy. Those are comfortable areas that I feel comfortable buying Amazon shares if we can't hold our support levels. And I can go all the way down the chart, but for the sake of this video, I picked 3 buying levels. Why? Because we're going to do an initial buy. Initial buy doesn't necessarily saying that this is your max budget for Amazon. This is your initial investment within Amazon, buying the dip, dollar cost averaging. So let's say we're going to use $2,000, $2,000 to buy into Amazon. This is your initial, right? You may have more back in the stash, or you may generate more later at a later point. But right now you feel comfortable putting up $2,000. Do you, and let's zoom in, put in $2,000 right now? You could, but you need to be aware that 116 is a heavy resistance level. As you can see, we have price action hitting this 116 level, only breaking out one time, but returning and felling. 116 is very 𝐾𝐨 Matumbo, big rejections, right? Boom. 𝐾𝐨 rejected, sent it back down. Boom. Rudy Gobert sent it back down. Now we're approaching it now. So you want to be very cautious. And this is where you need to be a little patient. You want to see if we reject this 116 level and possibly shoot us back down to the 101 area, which is a great zone to be buying. Now, let's say if you decided to jump in and spend 20% of your budget, 25%, or 20, let's say 25% of your budget is $2,000. That's $250 right now. That'll get you about almost 2 shares. If you're on Robinhood and Webull, then you get you about a share and some fractions, right? You'll get some fractional shares if you're on one of those type of apps. Almost 2 shares. And let's say it rejects that 116. You bought it. And it starts traveling to that 101. What are we doing? We're losing money. That's what we're doing. And we missed the opportunity to actually probably get 2 whole shares and then some. So, not saying to buy, sell, or hold Amazon now, but be very cautious because we're trading sideways, which is very dangerous. Not just in the options field, but also long term as well. You know, we want a stock to pick a direction to give us a little understanding of what's going on with the price action. And right now we're trading sideways. So how would I address this? How would I buy into Amazon trading in sideways? Well, I will first want to see if we're going to reject this area. Be impatient, want to see if we reject and send us down, because history's shown us that 116 is strong resistance. So I want to see if we reject that. So I just want to be a little bit more patient. I know what my friends are telling me. Hey, man, you got to buy it now. You got to get in there now. No, you don't. You don't have to get in right now. We've seen different opportunities at a lower price to get in, because ideally we want to buy shares at a low price. This method that I'm teaching you works for crypto as well too. Forex as well too. Price action is price action, people. So we want to stop listening to the homie brokerage. They're broke for a reason, and we want to look at the chart and figure out the smart way to get into these plays. And we want to say, hey, if this thing runs up, okay, it ran. That's okay, because there's opportunities, right? We don't want to jump into this thinking we're missing opportunities. That FOMO buying days are over with, guys. All right, so if it rejects here, we want to see if it rejects and sends this price action down. Now, let's say, hypothetically, our wish come true and price action breaks down to 101. I'll take that 25% right there, that $250, and I'll spend it and buy at this nice zone, right? That would be my zone, 101. 101 or 100, right? I'm very happy there. I'll buy some shares. What happens if this continues to head downward, right? Hypothetically. If we continue, we break this 101, we start heading to this 93 level. Then I might just spend another 25%. What is that? $250 from the remaining initial balance to 2,000. So I've spent $500 and I'm getting I'm getting Amazon shares at a good price each time. So that's 50% of my budget has been spent already between 101 and 93. All right. See where I'm going here, guys? See where I'm going here? Okay. What if this price doesn't hold? Maybe this price drops down to the 85 level. What are we going to do here? Now, I have $1,000 left, right? I have $1,000 left. I can break this down and spend 50% of that. We spent 25 the first 2 times. Now I'm spending 50 because I've got a real good discount on Amazon at $85 per share. So I want to make sure I spend a little bit more to bring that dollar cost average even down. Why do we bring the dollar cost average down? Because if this thing, let's say this thing bottoms out at 85, and I'm not saying it will bottom, I'm just giving an example, and the market reverses and we start getting into this bull rally, now I'm collecting profits as soon as this reversal hit, instead of waiting like most people who bought at 125 when this thing split. Now they need to wait for us to get to 126, 127, 130 for them to start making profits. You see what I'm saying? This is dollar cost averaging. This is why you do it. This is why you only invest into good projects in crypto or stocks, companies and stocks. Because when they're losing money, it doesn't mentally trigger you or turn you off from continuing to invest and miss opportunities of getting it at the best price. When you blindly jump into a play because you see it on the internet, Twitter, IG, or your homies from the brokerage homies, right? Telling you this is a good play, and you blindly buy in, not understanding it. When it start losing money, you like, damn, I'm losing money. This is a horrible play. but you didn't do your research. You don't understand what the play is. You just got into play. So I teach this to my community about not finding blindly. Even when I say, hey, I'm buying this and that, I try to give them examples on why I'm buying it and provide them with a starting point where you can start your research to learn about it, right? It's very dangerous when you're just taking investors' information off of TikTok and like, oh, the top 5 plays to buy in a recession is Coca-Cola, GM. Like, why? Like, I don't even drink Coca-Cola or Pepsi. I don't drink soda. Why the hell am I investing in it for long term? Now, I might run an option on it. You know what I'm saying? Why am I buying it long term? I don't even believe in it like that. I'm not saying you can't make money in things you don't believe in. What I'm saying is that I don't want to wake up one day and start doing Coca-Cola research. I don't drink Coca-Cola. I don't drink Pepsi. You know what I'm saying? So invest in things that you understand and have a general interest in, and especially now in this recession, like as we continue to be in this first phase of recession, because they say diversify your portfolio, but I think that I want to do the opposite and kind of trim the fat and only have blue chip, solid growth portfolios and maybe a ETF. But that's a whole nother video. We'll talk about that. All right, so we have 50% of the budget left. It hit 85.13. Holy we are rolling. Walmart prices roll back, baby. And I got 50% left. I got $1,000 left. I'm gonna take half of that $1,000, $500, and I'm gonna buy at 85.13. Now, you say, hey, shooter, you only got 3 lines here. Well, that's fine. But if the price action continues to drop, right? And I also use rectangles or buy areas or buy zones, whichever one feels comfortable. Let's say this price action drops between this 76.69 range. I will throw the last 500 at it. Now, I'm for sure locked in at the best dollar cost average if this thing reverses, because I effectively bought the dip and got my dollar cost average down. Unlike the person that waited when Amazon split and spent $125 a share for X amount of shares. Now, hopefully, if you did that and watch this video, you like, okay, I bought Amazon for a reason. Maybe I need to go back and wait for this thing to pull back so I can get some more shares. You have to make that conscious decision, right? I'm just giving you out some tools and tidbits that I use. And honestly, guys, it's about being patient and waiting for your opportunities to strike at a low price. Because ultimately, if we look at this price action, right? Let's go backwards. This is the lows of the pandemic here. This is the low of the pandemic right here. That March. This March right here. March 12th, March 16th. This is when we were getting words that the shutdown was coming. San Francisco was one of the first cities. Kind of had the trickle effect. New York, East Coast started, the market started crashing for about a good month. This is from February 19th to March 16th. We got the lows. And what did the market do? Let's look at it. From the lows of the start of the pandemic to the high, which was July 13th of last year. Amazon increased over 130%. Yeah, over 130% from these highs and lows. That's incredible. That's incredible. And what has it done since those lows, or those highs, excuse me? Let's check it out. It's definitely done some retracing. We're looking at bring that down a little bit. 45%. 45% from those highs. It's not bad. Good opportunities, man. Again, I'm not telling you to buy, sell, or hold Amazon. Just pointing out good opportunities, man. If you believe in something, right? And these methods that I use, you can use them for any stock out there. Amazon, Tesla. I mean, I've done it here in SPY as well too. And all you're doing is you're looking at the support levels, solid support levels that this price action could fall to, and using that as a buy zone, a entry. And you're making a budget, and you're not spending the entire budget in one move. You're breaking your budget down in percentile, and you're paying 25 here, 50 here, 25 here, 50 there until you spend the initial budget. Now, if you've been saving and putting away some more money for a particular play, that's fine. Do the same thing. The last key point of all this is that you want to have a log. You need to have some type of log. If it's an Excel sheet, a physical log, a diary or something. The reason why, and what I tell my Discord, is that you want to go from consumer to a CEO. What do you mean, shooter? I don't own Amazon. I know you don't own Amazon, but your dollars, each dollar is an employee. You should treat your each dollar that you put into the stock market or crypto as an employee, and you are the CEO. So you need to know how many employees you have out there circulating funds for you at what time and when, right? What I mean is that if I put in 50% of my employee power at this level here, I need to write that down and know exactly how many shares I bought at that level. Now, my next level is at 350. I'm putting in some more employees there. And each dollar that I'm putting in is our employees. They're making money for me. And I need to know exactly when, where, and how much. And I need to know how much they're generating me for me. And you need to log that. So when you start with your next $2,000 to invest into a play, you can open up that log and say, okay, so my 4 entry points was here, here, and here. I bought this many shares at this point. I bought this many shares at that point, and I bought this many shares for the last 2 points. And now the prices continue to fall. Now I need to deploy more employees into this area, this area, this area, this area. And that way you now have an understanding what your dollar cost average that you have per employee and what your turn or your ROI is looking like. You need to manage your portfolio, not just because it's on your phone. You need to manage it just like a true balance and revenue sheet. You need to be a CEO of your business, your investment portfolio. Treat it as such, a CEO, right? CEO, earners only. If you're in my Discord, we're earners only. We buy the best stocks at the best price. We buy the best crypto projects at the best price. We do not settle and we do not FOMO buy. We do not buy on green days. We are patient. We wait for the red candles so we can get the best price, because it's all about the best price. It's the best price, unless you're first. Unless you were first. And then when you're not first, you want to get it at the best price, right? You make real money when the market pulls back than you'll ever make when the market is trending up, unless you're trading options. So that's my sauce. That's my secret sauce on buying a dip effectively. Hopefully you guys learn something and be able to deploy these tactics into the field again. You know, not saying that the way that I do it is the hear all say all, but I mean, it's, you know, some educational tools that you can put to your tool belt. Take a little bit here and there. You can compare and contrast with others out there and see, you know, what works for you, and then come up with your own sauce and go from there. But this is my sauce. This is my secret sauce on how I handle things, and it's worked for me, and I'm going to continue to do so. And maybe I might add to it, but these are how I handle it. So a quick rundown. First thing first, you want to make sure you're on the daily or the weekly chart. You want to make sure you zoom completely all the way out on the chart, at least 5 years worth of data. You want to make sure you have your SMAs and understand which direction that the stock is trading at. Usually you want to buy in a downtrend, right? We're currently in a downtrend. If we're consolidating, you want to be very smart, right? Stock has not picked the direction yet, so you want to make sure it picks the direction before you start buying it. Next, you want to find your current price support line. Understand what that bottom looks like, especially with consolidating. You want to know where that consolidation bottom is. From there, you want to pick solid key levels, support areas or support lines for buying entry levels, right? You want to get about 3 or 4 of those. And the most important thing, you want to be mentally strong. You want to be mentally strong. You want to be mentally strong and patient and wait for the iron to strike. Right? You just don't want to be buying just because you're like, oh my God, I'm about to miss out. It's about to run up. You want to be mentally strong. And if you miss it, that's fine. If you miss it, that's fine. You want to be strong and patient. Set those buy areas and stick to them. Stop looking at your portfolio every day. Set alerts. Set that base. Tell yourself, these are my buy areas. I'm going to spend the money when they hit these buy areas. Say it out loud. These are my buy areas, and I'm going to spend the money when they hit my buy areas. Be strong. Be patient, baby. It's a patient game. It's a patient game. So, yeah. Hopefully you guys learned something. If you like this video, please drop me a like. I truly appreciate it. If you feel like this particular content or any of my content needs to be seen by others, please share with your people. If you want to be notified and stay tapped in with more information like this, hit the notification bell and join the gang, the earners only gang. And if you want to join the Discord, the link is in the bio. The link will take you to every page that I own. That's a link to me. The Discord is a paid monthly subscription, and you pick the price. There's 4 different prices there, and I'll let you decide what the best price is for you to be part of the community, and you can cancel at any time. And I'm also teaching option trading as well too. So if you want to learn about how to make money on the way down when the market's selling off, I have a one-on-one options training course where you and myself will sit down for about 6 weeks and go over basic stock and advanced stock strategies. And you'll learn stock options from the ins and outs, and I'll share my strategies on what I do. I'm a scalper by choice, so I'll share my scalping techniques, patterns that I like to look at, how I size into plays, and how I get out of plays, and much more. So yeah, it's your boy Wall Street Shooter, and this is not financial advice. Peace, y'all.